Hey guys, welcome back. In today's video, we are talking about why short sellers have lost, the AMC comeback confirmed, extreme buying of AMC, and many more in this video. Firstly, taking a look at this. Here's why short sellers have lost against AMC. AMC, with a mix of refinancing, share reserve sales, and improved EBITDA, can achieve a 1x drag at $3.5 billion debt. So one of the things we've been focusing on has been the fundamentals of AMC. When you take a look at the debt, which is something that we always focus on, currently we are at 4.08 billion, mostly at 11 to 13, effectively 15% interest, which then takes our annual interest to 460 million, which is currently bigger than the EBITDA at 388 million. So to achieve 1x coverage or minimal drag, AMC needs to reduce its debt owning to 3.4 billion. Now, when you take a look at the numbers, what we obviously have is that allows the sales of up to 550 million share reserve. This is something we've seen already and talked about. So even at $1 per share, if we were to sell all 550 million shares, we would see the debt go towards 3.53 billion, which will put AMC in a very good position, or at least a 1x hit. Now, of course, with this will come with many concerns, and I want to quickly talk about that. One of the biggest concerns people have when AMC is selling shares has, of course, been the fact that if AMC is selling shares, and in this case, if they were to sell the full 550 million share reserve, would the short sellers then use these shares to get out of their position? Now, the answer to that is if short sellers are buying these shares, they will, of course, use it to cover these shares. But does that mean they are able to cover all of their shares? Of course not. Remember, AMC is selling 550 million shares. But the synthetics that have been created are easily in the tens of billions of shares. So even if AMC were to give full 550 million towards short sellers and they were to use it to cover their shares, there will still be tens of billions of shares that are remaining to yet to be covered. And so this is what we talked about with how, for me, I don't mind a share offering because even if all the shares were to give into the short sellers, they are still trapped in this play. And if we are seeing that the short sellers are in fact in need of these shares, it just further confirms our theory of everything. All of the data that we've seen, all of the things that we know and we've said in the past will all be confirmed when they ask for more shares. But then secondly is, of course, understanding that by them buying these shares, it will put AMC in an even better position. And it's why we've seen them try to suppress AMC the whole time, because they realize how much money AMC is actually able to raise. And if AMC were to raise, for example, if this is $1 per share, this is 550 million. If it was $2 per share, it'll be 1.1 billion. And it's precisely because they know that they're trying to suppress AMC as much as possible. Consensus, debt drag is fatal, but the reality is that even modest deleveraging plus stronger EBITDA materially changes the equation. So this is where we are at with AMC right now. Firstly, we are getting rid of the debt like we have seen here. But secondly, our EBITDA is also improving as well. And so this is how we understand that AMC is on that path to obviously improve the company, to improve the infrastructure, and is exactly what we are seeing right now. You can see here, 15.3 million shares tied to consent fees from debt amendment. AMC gets zero from these sales. This was part of restructuring of note holders. The translation, balance sheet being actively managed, debt deals getting done. So we are already seeing this happening right now. We are already seeing the process. What we've said at the very beginning is just the case of the end when we were to sell, if we were to sell the whole 550 million. So far, we're already seeing how well AMC is doing. We're already seeing the debt being restructured. We are seeing the debt being reduced. And you can expect AMC to get even better by the end of next quarter and, of course, the end of this year. You can see it appears as if AMC is finally about to change direction and move north. There are plenty of signs as value far beyond box office recovery on the verge to be transferred to AMC shareholders. Now, this is of course then talking about the suppression that we are seeing. Stock occasionally exceeding 70% off exchange on a given day can happen. But a sustained average above 70% for more than 30 days is far outside the typical range and not widespread. So firstly, this is towards the people who constantly say that every stock sees off-exchange routing, sees dot pool. And again, we know that as well. What we do also know is that not all of them consistently see 70% for more than 30 days, especially what we talked about on AMC. And now this is happening at a time when we are seeing major buying going into AMC. We're also looking at some form of comeback. You can see breaking news, AMC comeback confirmed. Roaring Kitty's brother just validated it. We apes were right, we were just early. So with everything that's going on right now, with how AMC is improving, with how the current volatility in the market, with how we're seeing hedge funds, failing, how they're having to borrow more money to pay out, how certain institutions are actually stopping withdrawals. When we see all of this, we are realizing that this is the situation we have been talking about for a very long time. People constantly talk about how AMC is running out of money, how AMC needs to borrow money, which in the last few years we haven't. We obviously have the debt, but we are paying that off. But when you look at the complete opposite about what the institutions, the short sellers of AMC doing, they are doing precisely what people are calling out AMC for. And yet no one talks about them. And it just goes to show that they are trying to shift their whole attention and focus on AMC. And as we're seeing how AMC is drastically improving right now, they are trying to suppress us. No, I'm sure it's not a coincidence that FTDs in AMC spiked right when AMC looked like it was ready to rip in early Feb. So we've seen plenty of times about how AMC has moved. Again, we talked about the dark pool over here. For those of you who don't know, a quick little TLDR. Essentially, AMC went up 18% in 2 days with 60% dark pool. The moment they realized AMC was going up, they increased the dark pool. And then after these 2 green days, we saw dark pool go from 70 to 90%. And you can also see early Feb, as we see it hold and going back up again, we saw this with the FTD spikes. So if you want to look at the manipulation, when you take a look at the chart, you can see how all sort of manipulation suppression strategies being used are typically at times where AMC is showing green, where AMC is going up in value. And so you have to ask yourself this: why are there manipulation tactics being used when AMC goes green all the time? And that's because the short sellers are worried about what's going to happen to their margin, to the capital, if AMC were to go up even higher and continue their streak. And so this is why we've seen this FTD spike. Another reason is, of course, dark pool, like you've seen here, 80%. Now, the reason why this is ridiculous is because how much it affects AMC, and you can see it in terms of the industry standard. It was a stellar box office weekend for the movie theaters, and it seems Cinemark, IMAX, and many others benefit from it. Oh wait, isn't AMC the biggest theater chain on earth? So how is this price action possible? Taking a look at, again, people that are within this industry. AMC in the red, Cinema, IMAX, Paramount are all in the green. And this is what we talked about with the constant things that's going on, with how everyone is in the same industry, everyone's benefiting from the same thing, yet it doesn't reflect in the price, especially with how we talked about with AMC being 95% retail owned and Cinemark being 120% institutional owned. And you can see why there's a big difference and why we see Cinemark always in the green and AMC in the red. And then going back to what we talked about with the off exchange here, you wouldn't see constant 80% off exchange on Cinemark as you would on AMC. And that itself already sums up the entire problems. Pretty much 99.99% of buys straight to the dark pools, meanwhile on sales, using them to push the price down. So why are we saying this? Why do we understand that most of the buys are in the dark pool? Well, firstly, we just talked about here with the 80% dark pool. When you take a look at what's going on Webull right now, you can see Webull is showing massive inflows into AMC. That's not noise, that's signal, immensely bullish. So if you take a look at the inflow outflow, what you will see is this 225.88 against the outflow of 76.86. When you take a look at the large, medium, small orders, you can see there was no large orders of outflows, but there was 4 inflows. And then, of course, medium is higher, small is higher as well for inflow. Overall, everyone is constantly buying as opposed to selling. So this is the inflow outflow. Under normal circumstances, when you see a stock that has more inflow than outflow, you will see the stock price going up. But what we are realizing now is that the majority of these inflows are what we talked about here, going straight into the dark pools. But the sales, the small percentage of sales, these small outflows, they are hitting the lit exchange. And it's what we said with how dark pool is harming the price of AMC. Another thing that we're looking at, I don't personally agree with this in the sense that you can see firstly, analytic targets AMC to be at 172. It's trading 42% below the target. So let's talk about why I don't agree with this fully. Firstly, everyone knows AMC is undervalued. Everyone knows that AMC should be trading way higher at its real price. Now, the targets that are being given is 172. That's the area that I don't agree with. And the reason why I say this is because they haven't included in the future projections. They haven't included in the sentiment. They haven't included so much more as well. And we talk about synthetics. We talk about all these options. And that's why I agree with the fact that they are trading below the target. But I don't agree with the target of 172 because I personally think it should be way higher. But even then, you're still seeing how people are realizing and are agreeing with the fact that AMC at $1, it is just ridiculous. It is just extremely undervalued against where it actually should be. Furthermore, you can see AMC just gained an odd amount of buy volume nearing the squeeze. So as we see AMC go below $1, you're seeing how the sentiment or what the media is trying to portray right now is that it's all panic in AMC, that everyone is fleeing, everyone is going away. But what actually is going on is why I said I don't use technical analysis to predict where AMC to go. However, I do use technical analysis to have an understanding of the sentiment. What we can see is that as we see AMC go below $1, the very opposite of panic selling is happening. What we are seeing is immense buying, is people who are viewing this as massive discounts and as buying as much as they can into AMC. And that's what we are seeing right now. We're also seeing short interest dropping, which is extremely interesting. Now, people will say that it could be as these guys who are exiting the hedge, but we've already seen with how the data being used is that the data we're seeing here, the short interest is clearly not the case. We've actually seen the short interest to be at 300 to 400%. And that's not even fully covering everything that's going on. So firstly, when we take a look at this, it just shows that they're trying to hide more data right now and they're trying to create more synthetics of AMC. Now, GameStop has released their fourth quarter and fiscal year 2025 results. Quickly looking at it, again, we know that GameStop is doing well. Of course, on the revenue, they've missed, but we've talked about how recently the biggest thing is their merger acquisition. That's the thing that we should be focusing on. But this is something that you can obviously take a look at. Now, other things outside of AMC and GME, we are seeing NYSE partners with Securitize to develop a 24/7 tokenized securities platform. Now, I've already voiced my opinion on this. I think that if they want to do this, I am not against 24/7 trading. I myself am a big fan of trading. What I am against is the fact that they haven't taken a look at what's happened when people tokenized AMC, people tokenized GME. And so this whole tokenization, I think, will do more harm to the industry than good. And if they wanted to do something like this, they should firstly take a look at what happened with AMC and GME and actually deal with that first before they do anything else. Furthermore, US oil prices, you can still see extreme volatility. We're seeing it just go up. I just saw before recording of this video, Nasdaq future to go up another 200 points-ish in 5 minutes. This is what's happening in the market right now. It's still extreme volatility, and we're seeing many firms being harmed by this. The same thing with the 10-year yield coming to 4.43%. And what is even more interesting is the fact that even if though there are talks floating about, which is talking about peace talks, the yield is still holding at the rate, meaning people are skepticism about what's actually happening, and they don't actually think what's going to go through is actually going to go through. And this is why we said the volatility continues. Another big thing is Citadel Securities see short squeeze fueling US stock rally. Now, the takeaway you want to take away from here is, he said, retail didn't panic. They've been buying on weaknesses and selling on strength. And it's how we know that these hedge funds have been worried about retail for a very long time. And they realize that right now, retail has been the strongest they have ever been. And so it's why they're trying to find different ways to manipulate the data and to actually suppress AMC. As always, this is a financial advisor. Do take a second of stone. Make sure you do your own due diligence and research. And I'll catch you guys next time.